Today's NFP news was absolutely crazy. Let's talk a little bit about everything that went on, starting with this headline. U.S. economy adds more jobs than expected. Sounds dollar bullish, right? Well, just stay tuned. The U.S. economy created 311K jobs in February, above market expectations of 205K and the 183 monthly average between 2010 and 2019. Biggest job gains occurred in leisure and hospitality, retail trade, government, and healthcare, while employment declined in information and in transportation and warehousing. Meanwhile, the jobless rate rose to 3.6%. Now, again, most of that headline, most of this looks bullish. U.S. economy adds more jobs, 311K compared to the 205. Okay, good. This last line, guys, is where it really caused the dollar to freak out. The jobless rate rose to 3.6%. From the previous number of 3.4%. Let's dive into the dollar and take a look at some charts to see how things are going forward. Okay, guys, so here's a look at the dollar, and you can see jobless rate is really what counted here, because yes, you had more jobs created than expected, but then you had this big sell-off. So what the heck happened here? Well, again, jobs were created, but the unemployment rate rose. Not only did it rise, it rose by 0.2%, which is a pretty substantial increase in unemployment. Now, this is a very concerning thing because let me give you guys a full picture on the dollar. The dollar got incredibly strong during this recent run-up, mostly due to Jerome Powell's comments saying, we think that we're going to be able to raise rates sooner and at a faster, more heavy pace to try and combat with the inflation problem that we have here in the United States. Now, the problem with that, though, is that when jobs numbers come out or unemployment numbers come out higher than expected, that might cause some concern going forward with the Federal Reserve's plan. If they say economic numbers look good, that's why we're going to raise rates, but then job numbers come out and it's not so shiny and glamorous, it could cause them to be like, well, you know what, let's pause. And that's the weird reason why with unemployment rising, the S&P 500 jumped initially off of this news. Now, it's given back some of those gains since then, but the jobless rate going up actually was a slightly positive thing for the S&P 500, which is a bit of a strange one. But again, it kind of makes sense when you understand the full narrative of the Federal Reserve right now. And so when we look at things like, for example, DXY, it had a big sell-off. Now, the thing I will say from a technical perspective is that price basically broke out, retested these areas, and I tried to get long, and it didn't work out. In fact, I am receiving some lovely comments right now about how wrong I was, which I'm wrong often enough as a trader. It just happens to everybody. The difference is when you're right, do you make it count, right? Because when you're wrong, it's easy to be wrong in the markets. Things are crazy and unexpected. Again, based off the Federal Reserve's narrative shift, I was expecting more bullishness from the dollar. We still might see that, but right now the price is retracing pretty heavily. For me on the dollar, my thought process is if we can't hold this area, it's bearish until we get a deeper sell-off into, for example, maybe 104.2. If we get a retest of this zone, things become a bit more interesting again. But for now, I'm paused on my dollar bullishness. I'm waiting on this thing to set up again. But for now, the dollar looks really weak. And like I said, probably more interested should we come down to levels like 104.2 going into the end of the week. So that's my take on DXY. Let's look around the room and see what happens. So dollar just, again, the weakness of the dollar flipped the Euro USD chart, where we had, again, this big sell-off here on the Euro with that news from Jerome Powell. And then again, now think exploding back the other direction, narrowly breaking through now the 61.8% retracement. And this is totally a win for the Euro bulls. So congrats if you're bullish on the Euro, if you're, this was part of the reason why I did not get short myself on the Euro, why I sat on the sidelines with this trade. for a while. I wanted to get this short, but I was waiting for this news to sort of make a final opinion. And again, I'm glad that I didn't get short on this one, because 61.8%, man, it is just breaking clean through the highs. So we'll watch this one closer going into next week to see if it has some sort of relief if we turn back. But for now, this thing looking pretty bullish and probably not an interesting one for me. Now, gold, on the other hand, look at this move, guys. On the stream today, we said if this thing breaks, we're probably headed back up to 1855. And if we look at the 1 hour chart, look at this chart, guys. This is a beautiful bullish chart on the lower time frames. Now, as a swing trader, as a longer term trader, I don't have too much belief in buying gold right now. But in the short term, price broke out, narrowly retested this zone, and has exploded. I think we probably see this thing head on up to 1855 in the short term, as that is a key level for the bears. If price comes back up into that area, am I going to be bearish? Mildly, yes. I think that point could be of interest for possible short setups going against this in favor of sort of our daily chart downward trend that we've seen going on. So let's see if we can show you this. So again, big break to the downside, retest. If it comes back to test this area again, I would expect some response from the bears going forward on this one. So that's kind of my thought process on the gold market. Now I want to go over the S&P 500 from a technical perspective and a fundamental perspective. Man, this thing looks really, really rough. We're sitting at a support level, which is a one bullish thing in terms of the technical analysis side of things. We've had this little sort of higher low series, but if this breaks, you guys, oh boy, we've got something interesting to pay attention to, because if this breaks, if this falls apart, this S&P 500 could be very quickly back down to lows, 35, 60, etc. But that's not quite where we're at yet. Let's not get ahead of ourselves. Right now, we're sitting at a supportive level, but the fundamentals, guys, this is where things don't look so good. Let me show you some data here. We'll go through the Edge Finder. By the way, you guys can get access to the Edge Finder for a free trial if you would like to try it out. You can go to our website. There's a live chat feature, a1trading.com. Go on our website there, click the live chat in the bottom right. We'll show a screenshot of what that looks like. Hit that. Ask for a free trial, and one of my support reps here at A1 Trading will get you set up with the trial if you want to test out the Edge Finder Pro. Here's the latest. Economic numbers, 3.6% is what we mentioned. So ticked up by 0.2% compared to the expected 3.4%. We're up to 3.6%. Still, though, unemployment in the US better off than a lot of other places. Canada at 5, Europe at 6.7. Don't even get me started on Turkey and South Africa, which have some serious problems with unemployment right now. But again, overall, right, you have 3.6% for the US, and this is concerning, because with that ticking up, the Federal Reserve might need to pause on their dollar thesis, but it's still not a bullish case for stocks, right? In my take, that's why the market is not super overly leaps and bounds for stocks right now, is because you still have inflation problem. You still have, here's the US inflation at 6.4%. Their target, guys, the US, the Federal Reserve, they want 2%. We're very, very far off from that. This causes problems, and it can cause real economic hardship. So that's kind of where we're at with the juggling of unemployment and inflation and interest rates. This is the constant story that we go back and forth on. So something to think about there. Retail sentiment, let's get a latest view at this one. We can see the dollar Swiss, 86% long. So this is a red flag for the dollar, to be completely honest. USDCHF, the crowd going long the dollar against the Swiss franc. This has flipped recently. Now, the only thing is that if you look at things like UJ, 59% short, so the crowd is shorting that. Crowd is shorting gold, another red flag, right? Pointing towards maybe a short-term squeeze to the upside for the gold bulls, right? Retail crowd very short on gold. Euro is 50-50. Dollar CAD, this one's an anomaly. We got 95% retail traders short USDCAD. Let's go have a look at that one, because that could actually be a trade setup for us. A pullback here looks pretty attractive in my view. Now, this is a daily chart perspective. If you're looking at the daily, you've got a level of support all the way down at 136.50. It's a ways away, but if it does come into play next week, that's a longer term swing trade opportunity that might be of interest. So we'll keep an eye on that one as a possible trade for next week. Now, if you're more intraday, there's a lower time frame trade I want to talk to you about with USDCAD. You've got this idea here, breaks and retests now forming the 38.2%. narrows us into 1.3745, let's call it. If price comes into this zone, it's an interesting pullback play. If you're an aggressive dollar CAD bull, maybe this is something that you're looking for. If you're a seller, if you're looking for bearish setups on dollar CAD, breaks, retests, if that fails, maybe you could take this thing down to that level that we talked about. But for me, like I said, predominantly bullish on this one on a pullback if the trade sets up. So there you go, guys. That's what I've got for you today. If you enjoyed my video, make sure to hit the thumbs up button, subscribe, and remember, you can try out the software for free. You can join our Discord for free. All of that is linked down below in the description. If you have not already grabbed it, make sure to do so. Thanks for watching. Have a great weekend. Before you go, make sure to check out our free Discord channel linked down below in the description. And if you want to try out some of our products, our software tools here at A1 Trading, we have free versions available also down below in the description. Check them out for yourself down below. Also, if you enjoy our content here, we work really hard behind the scenes to bring this content to you each and every day. And if you enjoy our content, it would mean a lot to us if you hit the thumbs up button before you head out. Thanks for watching.